everybody, welcome back to the channel. I hope you all had a fantastic Thanksgiving break. I really do hope you were able to reset, refresh, and relax, and I hope we are ready for yet another busy week in the markets. I am going to be doing something a little bit different this week as I was kind of enjoying the holiday break. I will not be covering an entire 15 plus ticker watch list. Rather, I still wanted to get some kind of content out and give you a small 8 to 10 minute market outlook, just so you can see how I'm going to potentially approach this week, specific levels, PD arrays, ranges, and scenarios that I will be covering. And I am doing a Thanksgiving giveaway. I am giving out two free quarterly memberships for ABTrades. So make sure you follow me on X at ABTrades so you're able to see the guidelines that you need to meet in order to get put into the giveaway. So without further ado, let's just go ahead and get this little market segment started. So I'm pretty much just going to be addressing ES, and this is the daily. As something I also want to point out, right? SPY, when we were looking at the daily, I do want to kind of cover that this was all on very low volume, but this tends to happen during the Thanksgiving break. And we do have a supportive gap that underlines a very important area. And we're going to go back and cover that with ES. I just wanted to make sure you understood that there's a lot of commentary about, oh, this was a low volume drift up, but this usually happens very historically during Thanksgiving as it is a very low participant driven week. Okay, so let's go ahead and look at ES. So right off the bat from the daily, we did get a really nice directional move, right? With nearly every single day of the week, actually every single day of the week leading into that Friday was green and very directional, and even causing some pretty bullish supportive imbalances. One being a nice volume imbalance here. We have a nice daily FEG, another daily FEG. So we created some pretty nice supportive inefficiencies along the way. And I want to point your attention to why I have 679 and 6810 highlighted. And that's because there's confluences here that I will later further address within the 4 hour. So this used to be previous all-time highs until it wasn't and we broke through into new ones, right? And so now coming back into this daily, you can see the type of reactions that occurred here multiple times on 4 iterations and the underlying effect as to why that was occurring. So not only did we aggressively displace, we created this really nice inefficiency that would establish sellers, correct? And you can see how sellers were addressed every time we came into this zone. Now, what's important about this is we've now created an overlap between these aggressive sellers and now buyers. So the reason why this little zone here is going to act as kind of my pivot to kind of determine whether or not we see maybe a lower retracement or not is because this was the initial displacement. So the aggressive candle that started the aggressive swing into those previous month lows. And now we have flipped this area with another inefficiency. So, like as I said earlier, you have two overlapping inefficiencies that also coincide with your previous week high. So this is an external zone that we know has confluence because of what it did. And now we have overlapping within that area. So for me this week, and what's going to help me address whether or not we go lower or not is if we can hold 679, 6810 on any retest. So there's a few scenarios at hand, but the daily is looking good. We did kind of slow down into this little daily inefficiency here. So coming into this red zone is something we have marked out. Looking at the monthly, we have a nice hammer month. So far, order flow on the monthly still points up. On the 2 week, we have a inside 2 week. For strat traders, this can be a very good directional trade. And on the weekly, we actually showed some aggression, which once again you can see the importance of that previous week high and that zone that we have addressed. 679, 6810, I think are going to be pretty important moving forward. And then when we go on the daily, you can see how pretty this direction has been with supportive areas. Now, the main time frame that I want to pay attention to for me is the 4 hour. And the 4 hour is going to be important because each green range is a supportive breaker and or range that has flipped. For example, this green range down here was an established low until we broke underneath and rejected, and then we started to flip it back. Same thing for this. This is a supportive breaker followed by an underlying inefficiency and OB. Same thing with this. So I've annotated important breakers and or PD arrays that I think can become significant if we do manage to come back down, and then the ranges for sellers, right? The aggressive move before the overall development down happens. Same for those previous all-time highs, which can end up becoming liquidity targets. Now, the way I want to address this is based off of the pivot 679, 6810. If we manage to stay above that, I do think we potentially attack these highs first before some kind of retracement. Now, if we start to fall under 679, 6810, then I do think we go for some kind of 4 hour sweep before then returning back up. And it's just like that. It's as simple as that because there's two things you can use here. If we push up and fail, so remember, while we stay above, let's cover that one more time so you understand. While we stay above 679, 6810, I'm looking for price to continue its development up into these red ranges, which we know can be addressed with sellers. Now, if we manage to lose this pivot, then I'm looking for some kind of retracement into one of those established zones. Now, I don't think we go lower than like 6660, whatever, 6660. I would pretty much just kind of like some development around here, or if we come something like this, right? Push up, fail, sweep, and then run higher. But at the current moment, the way things are looking is, and I go back to this daily, it does look like we want to attack and run into pretty much slightly under all-time highs or new all-time highs before a bigger development down. Um, it's just a really nice broadening. And when I come back into correlate and show you, hey, this is what the structure is doing. Remember, we want to be participants of the order flow in terms of are we going up or down? So we take this entire extension, you establish those lows, you retrace, you create lower highs, you come back down, you retrace another lower high followed by a lower low, and then you come back down one more lower low, and then you immediately push up. So when I come here and I bring this down, you can see the importance of the structure, right? Lower low, lower high, lower low, lower high, lower low, and now it's changed. This area has now flipped, and that same area aligns with, excuse me here, it aligns with that pivot. So you can see why now there's a lot of merit behind this zone, right? This was also our last identified lower high before we broke through it. So now it just comes down to what ranges hold and what we attack first. If we do manage to push up here and we find exhaustion, I would like to get some kind of sweep back to either test this pivot or back into the lower range. And the first lower range is 6748, 6722. The second range, which kind of already was tested, is 6689, 6664. And the lower extremity, which I don't really see happening this early on, but it is 6623, 6596. Basically, what I'm looking for is I would like to see some kind of push up that finds exhaustion, maybe gives you some kind of corrective retracement, and then you run for highs. If we pretty much just run for highs straight on, I do think we get a bigger sell in the second half of December. So if we just go for the run, the high, sorry, if we just go straight for the highs without getting some kind of corrective action, and we kind of just do this, I think it just sets up yet again one more delivery down, and then maybe the second half of December or into January is a little bit worse. But we kind of just have to play it level by level. And at the current moment, order flow has changed on all time frames. We have time frame alignment on the 4 hour, daily, weekly, and monthly that all points up. Whether or not we find exhaustion, retrace, and then go higher, it is still pointing for delivery back into 6,900, 6,930s, and maybe even the 7,000 plus range. So that's kind of how I would go about it this week. We do have our identified ranges. The red range is 6,875, 6,900. The second red range is 6,929, 6,954. And I also want to show you something too. Based off of this little manipulation that happened here, price pushes down, slightly sweeps, and then manipulates again. So when we take our standard deviation on this, you can see where price lines up with kind of like that -4. We've taken out all of the corresponding deviations here, and now we're approaching. I do think this might be some kind of exhaustion zone, and I am willing to say, oh, we go higher if we do manage to climb above the 69 like oh 05 if you want. So you can even add a final level here right around like this area here, because this red range also lines up with my -4, and so we could find some exhaustion. So if we do get some kind of gap up on the market, I would like to get some kind of retracement. And if we don't get an initial retracement, then I would like to see either this test or this test, right? Test the previous week high, which is our weekly pivot, or find some extensions down that also align with maybe some kind of hourly OTE. Um, so annotating this, right? This is a little bit arbitrary because we haven't had the open, but just so you guys can understand. Right? And then the hourly OTE lines up with 6722, 6747, which is our green range. So there's good confluence for price to potentially redeliver there. So kind of keep our eyes forward. But yeah, that's pretty much my market outlook. Order flow is pointing up. We do have time frame alignment, so there could still be follow through into December OPEX. We do have FOMC coming up, and there has been some anticipation for rate cuts again, I believe, if I'm not mistaken. Um, and so we just gotta see how things go. But remember, you do not want to fight against time frame alignment. Time frame continuity is your friend. So hopefully you enjoyed this. Hopefully you were able to annotate the levels. You can always go back and replay everything. And if you have any questions on one of the levels you might have missed, just ask me in the comments. That concludes my little mini market outlook. Hopefully that helps and maybe allows you to see how I kind of build my blueprint for the week ahead. And as always, I just ask for your support by subscribing. Let's get this account to 5,000 subscribers before the end of Q1. I really am looking forward to sharing all of my methods. I just need a little bit more help from your end, and we can get all that really good educational content out. Share this page with your friends, comment, like, and as always, I will see you next week. See ya!